One of the things I've been running into, especially with like first-time buyers, a lot of first-time buyers out there love it, right? 40% or so of the market, they're questioning, they find out at the closing about owner's title insurance. Mm-hmm. Don't they already have title insurance when they're going into it?
No,
Who's that protect?
So the owner should have it.
Yeah.
The seller should have it. But they don't typically get it until they've actually become the owner. Once the deed gets recorded, that's the effective date of the policy.
Okay.
And it relates back in time before they became the owner.
And
it also is something you don't pay year after year, like a homeowner's insurance policy.
You pay it once.
You pay it once.
The owner's insurance policy on the deed, on the title, right, is going to be different than the lender's if you're getting a mortgage.
That's right. If you're buying a property, then the owner's policy is the policy that insures you. The owner's title insurance policy insures you. And it's different than the homeowner's insurance policy that you get, from your local insurance agent. But this is protecting you or the owner of the property for any issues that could or should have been picked up in a title search. There might be a lien that was misindexed. There might be a judgment, a mortgage. Maybe there's a problem with a deed. And these types of things are the things that title insurance policy will protect. If you're borrowing money, it's not an optional policy. The lender's policy is going to be required by the lender. That policy does not insure the owner. That transfers from lender A to B to C, just in the example we just gave.
Yep.
So that doesn't give the owner coverage. So that's key because people think that there is an overlap, but there's not.
So what's the cost about? And I know it depends, but let's just say you got a $300,000 3-bed, 2.5-bath home in Rhode Island. What is the estimated cost on a owner's title policy?
It depends on the purchase price. Between let's say $500 and $1,000, maybe $1,200. So it's really fairly cheap money, and it's not a reoccurring bill. It's one time at the table and it's done. And so, it is the owner's policy is an optional policy, but it's well worth the money.
Well, let me ask you a question. So
people think it's a scam, but it's not.
No, not exactly. And I've had people say, like, why am I doing this? Like, because it makes sense. Does it cover boundary disputes? Because we're in no survey state.
That's right. Yeah. So no, in Mass and Rhode Island, typically there'll be an exception, a standard exception. The only time that you would remove that standard exception is when the borrower or the lender might say, "Hey, we want a survey done. We have an issue with the."
Never had it happen.
It happens once in a while, blue moon, that type of thing here. There's other states where they require it every single time a loan gets taken out.
So there's no extra policy to tack on to that. Like, you know what? I want the works. It's like an Oneyville wiener with the works, right? Let me get that survey, policy on
They have
here.
plus policies where, they give you slightly elevated coverages. And, there is like a checklist of things that would be increased on a plus policy versus a regular policy,
something to consider.
And it's of course it just depends on what a lender will have in their system in terms of what they're quoting out to their customer.
Yeah.
They might not be quoting out the plus policy, so you have to ask for the plus policy in order to get it.
See, I didn't know that until I asked you.